Our first guest joining us, Mr. Shyam Srinivasan, the MD and CEO of Federal Bank, is with us. Good morning to you, Shyam. Thank you very much for being up so early. Well, first up, take us through your quarter's numbers with a special emphasis on that asset quality number, which is not looking too good.
Quarter one profit was 141.39 crores. Overall, credit growth was about 10 odd percent and deposit growth was about 16.5%. The growth in deposits has been fairly strong and very granular in nature. Our retail deposits is now about 96.5% of the deposit book is retail, and NR, which is our strong segment, has grown remarkably well at 29%. Cost of deposits have come down to 7.12, an improvement of about 15 basis points from the same quarter last year. And savings has grown at 19%, and CASA has grown to now 31.5% of our deposit portfolio as CASA. So the franchise on the deposit side continues to be strong. The credit deployment, credit growth continues to be muted. As you notice, our credit growth has been about a little over 10% on a Y-on-Y basis. And in particular this quarter, in the large corporates, we saw significant pay downs, probably because customers saw opportunities to fund it lower through other market instruments. So credit growth continues to be muted. SME, which is a strong segment of the bank, has seen a growth of almost 17% Y-on-Y, and even growth in this particular quarter, as also the agri business has grown substantially. On retail, our home loan portfolio is growing well. However, gold loan continues to be very muted, in fact degrowing to some extent, and this has been on the consequence on the back of falling gold prices. Overall, net profit for the quarter was dented on account of two very specific events. One was the impact on account of a large account in the metal space slipping. That was about 134 crores, and the impact on account of provisioning and the interest income reversal on that account had an impact of almost 70 crores on the P&L. And the treasury provisions, which is more market related, was 49 crores this quarter. So two specific events. One is a large account slippage, and the treasury provisions have had an impact on overall profitability. Operating profit on a Y-on-Y basis has grown 15 crores, about 4.5%, and the net interest income has grown roughly 9% on a Y-on-Y basis. So those are broadly the highlights of the quarter.
Yeah, point taken, Shyam, about the cost of funds and the growth in your deposit franchise. But give us a little more color on this asset quality. Okay, even if it's just one metal company, this is still a 23% rise in gross NPLs. Give us your outlook on how asset quality will proceed here on.
Last 8 quarters, we were trending in the direction of improving every quarter. This quarter, this one particular account has influenced the outcome. It's a function of both denominator growth and lower slippage, both of which we are actively seeking. Like I mentioned, we don't have any significant large ticket ones that are looming large, so we would like to make sure that the trend only improves from here.
Okay. Mr. Srinivasan, morning. You were just telling us how, in terms of credit growth, you're seeing significant pay downs in credit for large corporates this quarter. So what is the outlook for FY16? When do you expect a pickup, and in which sector?
Our strong segments have been SME and agri for many quarters, and even this one, they've grown 17 and 19%. So we will certainly see a similar or better growth in a full year basis in SME and agri. Retail, if I disaggregate gold, we are growing very strongly. Gold continues to be fairly muted, largely on the back of falling gold prices. In the area of retail, we are, besides home loans, we are looking at very confidently stepping up our personal loan portfolio, which we are now seeing good traction. So SME, agri, home loans, personal loans will see good growth, anything in the north of 20%. In the area of corporate, it continues to be, I would say, area of watch. Though I am hopeful by end of the year, even that will trend in the mid-teens. But for now, that continues to be very muted, in fact degrowing from a sequential quarter point of view. Y on Y, it's grown about 4%.
Okay. You know, apart from asset quality weakness, the street is also concerned about how your net interest margins have fallen about 20 basis points this quarter to 3.1%. When would you expect a recovery?
Our full year last year was 325. I think we will still hold on to 320 to 325 for the full year. Our cost of deposits, as you may have noticed, has dropped 16 basis points. That should give us them.
All right, Shyam, we'll take you up on that next quarter. Thank you very much for joining us and detailing the nuances of your numbers. We have to take a break on that note, but thereafter we are getting you a bunch of trading strategies. Shubham Agarwal will join us in Mumbai and in Bengaluru. I am being joined by two rockstar brokers who are going to speak to us about a bunch of stocks. So all that coming up for you in just a minute after this break.